Gold speculation reaches a record low. Could this be the perfect time to start acquiring gold assets? Amir Adnani, top resource entrepreneur and recipient of Casey's 10-Bagger Club, thinks so. In an environment where nearly 70% of TSX Venture mining companies have a market cap of less than $5 million, Amir's new gold company, Brazil Resources, just raised $6.4 million through an oversubscribed private placement, with the biggest buyers being management, Doug Casey of Casey Capital Strategies, and legendary investor Rick Rule. BRI also just completed the acquisition of Brazilian Gold Corp, which will more than double their in-ground gold minerals. Brazil Resources seizing the opportunity. Greetings and thank you for joining me at FutureMoneyTrends.com. I'm here with Rick Rule. He's a legendary investor, and he also heads up Sprott USA. Rick, thanks for joining me.
Dan, pleasure as always.
All right, Rick, so I have been very picky with the resource stocks I bought for the past 3 years. Not because that's my style, hopefully it will one day be. It was more just the allocation of capital. Anyway, 6 weeks ago I had a weekend with Rick Rule, and I watched, 12 hours of YouTube videos of you in the last 6 months, and you gave me the courage to buy about 10 junior resource stocks, many of whom, or probably all of whom, you own. How does this compare to other bear markets? From what you've seen, I guess I'm kind of leaning on, is this the worst one you've seen, or is this, what's it compared to? How safe am I buying?
The sector is never safe, first of all. You've asked me a bunch of questions there, so I'll try to take them sequentially. We've talked before, Dan, about the fact that if the junior mining sector is composed of 3,000 names on a global basis, you can scrape a zero off that in terms of which ones you can consider buying. So the first thing is that 1 in 10 juniors even merits consideration. And if you pick the stocks well, over time, I think you will do well if you confine yourself to bear markets. Now, with regards to ranking this bear market against other bear markets I have seen, the bear market of the early and middle 80s was like comparing having cancer with the flu. That was a very bad bear market. That was one where more than half of the listed oil companies in the globe, big, small, otherwise, went broke. That was a truly special bear market, one that I also experienced personally, sadly. The bear market that we enjoyed, if that's the right phrase, in the period 1998 to 2002 was, in one sense, a deeper bear market, and in one sense, not as deep. Deeper in the sense that the companies that came into it were less well fortified financially than the ones that came into this one. Deeper in the sense that the duration was longer. So I would describe this. What's interesting to me about this bear market, and maybe a better way to have answered your question, would have been to say that I think this bear market probably sets up the best opportunities of any bear market I've ever seen, for 2 reasons. The fact that the companies that came into this bear market gorged on capital from 2004 to 2010 means that the assets that are on sale now were bought with cheaper capital and better managements than ever before. And the severity of this market in a relatively short period of time, a 75% sell-off in 3 years, suggests that in certain cases, not every case because most of the money was wasted as it always is, but in certain cases you're getting relatively well-chosen assets at a 75% off sale.
So what does a recovery look like in a junior resource market? I mean, this is new to me, so should I expect the next year to be, a snapback, or is just like the bear market, it's been 3 years of the bull market, going to take 3 years to start?
The bear market that we enjoyed, if that's the right phrase, was one that didn't occur with a capitulation sell-off. We talked about this before on your show. You may not remember, but I do. We didn't see the precipitous downside. This bear market has been like a board going through a planer mill with a belt sander coming down, taking a little piece off it. Without the precipitous sell-off, you don't get a precipitous decline. The recovery that we're in right now, which I believe began in July of 2013, is and will continue to be a saucer-shaped recovery with higher highs and higher lows, but with every gain consolidating. This is an extremely healthy market that we're in. It is exhausting your patience and exhausting your faith, but what you're seeing classically is stock and metal moving from weak hands to strong, gradually. What will happen in this market, and you're going to ask me when, which I will duck. What will happen in this market is two things. The author of every bull market is a market where where expectations are exceeded. And Dan, it's impossible that this market won't exceed expectations, because this market has no expectation associated with it at all. The challenge would be to get under the hurdle, not over the hurdle. Yeah. Markets happen when, by surprise, the market performance exceeds expectation, and that will happen. And at some point in time, I unfortunately can't tell you when, we will experience a mini melt up. You will be expecting, because you've been conditioned to, a 20% advance followed by a 15% decline for a 5% net gain. One of these days, you're going to find a 40 or 45% advance with no concomitant decline. I can't tell you when that's going to happen, but 40 years of sometimes hard experience in this market tells me that it will happen.
When?
Told you, I duck it. That's a young man's job.
Are you I don't want to say comfortable, but are you open to sharing like the last 3 stocks you've bought?
No. The last 3 stocks I still bought, I'm still buying. And the idea that I'd have 10,000 of your closest friends as my competitors in the market is not a prospect which fills me with joy.
Well, let me put you in a conflict of interest, because your job is probably to promote Sprott as a business and as clients.
Yep.
What about Sprott Asset Management? Because my thought is safety, and Sprott, I always think of, with buying like a bigger stock like IBM or something, okay, my grandkids will do business with them. But with Sprott, it seems like it's almost like the shotgun approach. You're investing in all the resource stocks and without really any risk. It's not like Sprott's going to go away in 10 years. It's got no debt.
As a matter of public record, I own something like 30 million shares of Sprott, none of which were in escrow. I sold my business for some. I bought the rest. We've done a really remarkable job in Sprott in a bear market that saw our basic asset class fall by 75%. We had 3 businesses in Sprott that need fixing. We fixed 2.5 of them, and we built 2 new businesses in the course of that, despite a market which caused many of our competitors to go away, which, by the way, is good news for us. We come out of this with $325 million in net working capital, no debt, in a business that generates between $45 and $50 million a year in free cash in a bear market. We have 160 investment professionals who, as you might suspect, are battle-scarred and ready to go. We pay a 4.2% dividend, which we get from free cash. We don't borrow to pay. And what you say is, in fact, apropos. We're, in effect, a mutual fund where you don't pay fees, you receive dividends. So for a passive investor in Junior Resources, Sprott may be the best pick of all. It's certainly the largest exposure I have to the junior resource industry, but I work there.
Now, I know it's irrelevant of what it used to trade for, but didn't it trade for around $11, and today it's around $2?
Yeah,
right?
it came at $10. I think the high was 11. And I haven't seen the quote today, but I suspect in Canadian dollars it's at 275 or some number like that.
Okay. Silver, because of Eric Sprott, a lot of people have been attracted to Sprott Asset Management because of the silver ETF, which actually I think it's a trust, right?
Correct.
Silver just made another new low in a 4-year low. I wanted to know if you had any initial thoughts on it. I mean, gold was holding up. The juniors have always been holding up. But here's silver is making another 4-year low.
Well, from the point of view of someone like myself, admittedly, I'm A, rich, and B, patient. The fact that silver made a new low is a good thing. The way that one adds wealth is by buying an asset class that one thinks is attractive as cheaply as possible. People who don't agree with that are people who are nervous about their existing position, not people who are trying to get wealthy in the future. I have been a consistent buyer of precious metals, and I suspect that I will continue to be a consistent buyer of precious metals until I see them disgracing the covers of the major news magazines in the United States. In other words, until a trade becomes popular. So perversely, the declining silver price is attractive to me because I'd like to own more of it. I realize that many of your listeners have neither my means nor my patience. And for them, I can only say, this is going to sound really ethereal and make me a Californian, but the essence of wealth is to enhance your sense of well-being. If your silver position is causing you trauma, sell it. You know, get out of it. I can't tell you when it's going to turn. I can tell you why I think it's going to turn. But the truth is, if you're uncomfortable with an asset class, sell it. Buy something that you're comfortable with.
A few years ago we talked and you said that without a doubt, platinum, palladium, in fact, last time in Tucson, I asked you if there's only one investment you could make. I believe it was physical platinum and palladium. Is silver, now that it is below the cost of production, do you equally like silver just as much, or you still
I don't. I still like platinum and palladium much more. With silver, you have to contend with the fact that nobody really knows what the supplies are, because so much has been stored as personal wealth in the Indian subcontinent. And if you probably don't because you weren't in the business then, but if you were, some of your listeners will remember back to 1997 when the silver price ran as an odd set of circumstances surrounding Warren Buffett's purchase of silver. At the same time that the Asian contagion caused the Indian rupiah to collapse and drought swept central India, that set of circumstances caused a wave of silver to come out of India and crush the 1997 bull market. So the important lesson from that is it's very, very difficult to understand the total supply of silver and what price it will come to market at. The second thing is, in terms of production, there's very little primary silver production. Most of it is produced as a consequence, as a byproduct of copper, lead, and zinc production. And so to understand future production trends in silver, the silver price is irrelevant. The copper price, the zinc price, and the lead price are what you have to look at. Those facts, the uncertainties associated with supply, make me prefer platinum and palladium, where you can see the above ground inventories and you can see the fabrication demand on an annual basis. I understand the silver thesis. I understand the thesis of silver as poor man's gold. I like it. I like the narrative. I like the story. I don't like the uncertainty.
That's great. Last question really is a total selfish question on my part, because I want to ask you about the government. And it has to do with, I took on a new editorial role at a website as Dissident Dad, and I'm talking about raising my kids in this corrupt environment. And you have some great thoughts on just wealth and being independent of the government and not, you despise it from what I understand. So my question is, when my son asked me if the police are good or bad guys, and I told him everybody has their own choice, but some police may... but either way, even if you're a great cop, you have to enforce unjust laws, like somebody relieving pain from chronic ailments. So I know this is a big, long question, but what is the government to you? And how would you teach it to somebody?
Well, I think your response to your son was especially profound. I have noticed that many government employees I've met, including most policemen I've met, are very good people. I regard them uniformly as misguided because I think that the institution that they work for, be it the government itself or the police, is evil. And I don't think of them as evil people, which would suggest from my point of view they're misguided people. I think it's very important to stress to your son the difference between good people and an evil vocation. I think the second thing is that you need very early to introduce your children to the concept that involuntary servitude, which is what taxation is immoral, that it's slavery. And I think it's important to explain to young people that the extortion by force, threat, or fraud of the fruits of an ordinary citizen's labor, irrespective of whether it's of 12 months duration or 4 months duration, is slavery. And so, from my point of view, in order for a young person to be in favor of government, they have to believe that their interpretation of someone's needs gives them a call on somebody else's means. In other words, before they say that they're in favor of government, they have to say that they're in favor of slavery. And that puts a young person in a fairly unique position. The young person is going to say, but it's not really slavery because we voted on it. Yeah. Well, there was a vote in the 13 colonies back in the old days, and they decided that the vote didn't apply to either women or blacks. And it's the same kind of vote. There was a vote in Germany, I think it was in 1943, that brought in Hitler. Just because slavery's popular doesn't mean it's right.
Rick, thank you so much for your time and wisdom.
Thanks for the questions.
That's fine. Party numerous of them, and for the record, I'm actively soliciting one. On my honor as a stockbroker, everything I'm going to tell you now is true and correct.